Okay, good morning, everyone. Today is a very exciting day. In coordination with Grace, Rays, and Tide, we have a very special guest today, Lisa Edgar. My name is Sasha Bernier, and I am a partner at a private family office called Cheltenham Enterprises. Again, today we have Lisa Edgar, so we're excited to be able to have her here with us today. Hello, Lisa.
Hello, Sasha. How are you?
Good to see you. 2 months ago, I didn't know who you are, and now I feel like we're best friends.
We've had some great conversations. It's a good Saturday afternoon. How are we going to solve the world's problems, right?
Well, Lisa, I would love you to first introduce yourself to who you are and anything you would like the world to know about you.
Yeah, so hello, everyone. I'm really happy to be part of this discussion for the Investment Diversity Exchange. I'm Lisa Edgar, Managing Director at Top Tier Capital Partners. Top Tier is a venture capital fund of funds located with its headquarters in San Francisco, and that's where we started. And now we have offices in Boston and London, which is where I sit. We only do venture and we invest in funds. We do secondaries, both company and LP positions, and also co-invest directly in companies. So that's what I do.
Great, Lisa. Talk more about your journey. How did you get there? How did you start? And especially as a woman in a field dominated by men, you were really able to excel and become one of the top people in the industry. Talk to us about that and the things that you remember the most in your journey.
Yeah. So first, my professional career is a bit of a circuitous journey. I actually started in the hotel restaurant business. I actually have an associate degree in that, and I was working in hotels and restaurants in Hilton Head Island, South Carolina. I'm originally from Pittsburgh, moved there, started my career, and then moved out to California, to the San Francisco Bay Area. And after some time, I realized, I don't know if this is for me forever. And I had always been very interested in investing. And I was able to reposition myself, which we all have to do in various times in our life, and get a job first in the Federal Reserve Bank of San Francisco. I was working in the economic research department and with that group. And then after that, I actually moved into more directly investing in what I'm doing today. So I got a job with Horsley Bridge, which is another fund of funds when they first moved to San Francisco from Rochester, New York. After that, I worked at W.R. Hambrecht, which was a small boutique investment bank. Then actually went to Paul Capital, which is the predecessor firm of Top Tier. There was a group of us in 2011 that the venture capital fund of funds group spun out of Paul Capital to form Top Tier. So really, I think of myself as having two careers, and maybe I have one more. I always thought I'd have one more, so we shall see. Being a woman, like a lot of maybe underrepresented individuals, there weren't a lot of women. So there weren't a lot of women in the room. And so sometimes that was quite difficult. I remember there was a time when I came back after having my daughter, came back from maternity leave, and I was talking to another woman in the office, and I said, I miss my baby so much. And she said, oh my gosh, please don't say that in front of the partners, who were all male. And I thought, oh boy, okay. So what did you do? What did I do? I went and found my network of other women in the business. And as you probably know, there's more women limited partners than there are VCs, which is a shame. But the women that were in the private equity industry started getting together in a professional way through things like PE Win and some of the conferences and summits that we have. And we built really deep professional networks that way, as well as personal networks that way. So some of the women that I met through those organizations and through those seminars and conferences today are great friends. A lot of us have raised our kids, and now the kids are out of the house and we're actually doing wellness retreats together. So, finding that group and finding that support of like-minded people was really helpful for me.
Interesting. So Lisa, you're kind of almost like an OG in the industry. So um, can you talk about how you've seen VC evolve through your career?
Well, it's definitely no longer a cottage industry, which is the way we used to describe it. And I think the way that it has changed the most is actually the size of the industry and the globalization of the industry. Today, most people know what venture capital is. Certainly, if you're in the business community, you do. And if you move around the world, like a lot of us do, there's a lot of venture capital activity as well. So I think those are the two ways that it's changed the most.
Interesting. So 2020 has been such a traumatic year, Lisa, probably unlike anything I've seen. Um, Talk about how did COVID, you think, impact the space, and how do you compare it to past cycles?
Right, so this is my third downturn, and I did say I had at least three in me, so that's a good thing. um, Let me just go back. The first downturn that I experienced was the dot-com boom and bust. And if you think about the companies that were created then and what was happening in venture capital, there was a lot of funding going into companies that really didn't have any sustainable business model. They were built on technology, the internet, basically, that was coming, but really was not to the level, and the infrastructure was not built like it was today. So in that case, there were a lot of companies that just really had no chance of making it. And a lot of those companies went to zero after putting sizable amounts of capital into them, because we didn't have things like cloud computing and AWS, and so you had to buy all the servers and do everything. You spent a lot of money. It went up and then it went down, and really it was a bust.
Hmm.
So that was kind of that first downturn in venture capital. The second was after the global financial crisis, and just given its name, it truly was global, and it was more of a liquidity crisis. So it was more about cash flows. It was more about syndicate partners, the ability of people to actually continue to invest. If you think about both of those kind of fundamental drivers of the last two downturns, frankly, neither one of them are what's happening today. I mean, what really is happening today is we have a serious health pandemic. We have significant business stoppage and activity, in some ways because of lockdowns, but in other ways because just businesses are not able to continue to generate the types of returns. And it also it was probably time, like most of us thought, to have a down, part in the business cycle. So all of those have hit the industry. There are certainly a lot of companies that are struggling. There's a lot of individuals that are struggling, losing their jobs, which is incredibly unfortunate. But if you look at venture capital, we've actually weathered through incredibly well. I'd say the first 30 days were spent trying to understand portfolios and companies and shore up their cash and make sure, that they had their house in order, if you will. And then some of the businesses really started accelerating, the collaboration software and the telemedicine. I mean, we've talked about this. And so today, if you look at that, and then you look at the public markets, I mean, think about it. We had NASDAQ go, from 9,500 to 6,700 back to 10,000. I mean, I don't know what it's going to do through the rest of this cycle or how bad things are going to be. But for the most part, it feels like technology, both life science, whether it's vaccines and therapeutics to help the virus and the pandemic, or if it's just business software to help us continue to work. I mean, if you think about it, the pandemic hit 10 years ago, we could not have worked the way we do today, right? So, I mean, that's the long way to say venture's actually doing pretty well.
Right. I mean, just using Zoom, right?
Yes.
Before the pandemic, I don't think I ever used Zoom, and now I don't think I can live without it. So I definitely understand. So speaking of which, what are the things that the pandemic to you made you realize that you can't live without, just out of curiosity?
Yeah, it is Zoom. I mean, we did this workshop the other day. We have this great individual that's helping us as a team, and then even as an executive team, just really think through our business. And, in this case, it was about resiliency and through the COVID crisis and stuff. And there was a question that said, what technologies can't you live without? Netflix, Amazon, or Zoom. And frankly, there was one other, and I don't even remember what it was because it must not have been relevant at all to me. And for me, it was 100% Zoom because of this type of relationships, what we can do. I have calls with my family and my friends and business. I've met people over Zoom for the first time. I've met you over Zoom for the first time. We've never met in person. And that when I see people and have those interactions, I think it's just phenomenal. And we know that there are venture deals getting done through Zoom. There's a lot more references and a lot more back channels. Absolutely, but there are deals getting done over Zoom. So we shall see what will happen in the future and what kind of like hybrid world we'll have in the future.
Right. So for me, it's been my George Foreman grill because I could never cook. Now, now I realize how important it was to me. And hopefully, you'll have an entrepreneur that can do some type of virtual haircut. This is like the longest hair that I've had in many years. So,
right. I say grow it longer. Why not?
From the family office perspective, we tend to be very skeptical of VC because of the likes of WeWorks and SoftBank, and it's there's been so much capital going into it, sort similar to what we saw with hedge funds. Um, how should we think about this asset class in the long term?
Yeah, a lot of investors, family offices, or just new investors to venture capital always think, gosh, this is the right time. Valuations always seem so high. And I think about that when you buy your first home or maybe any home, you think, oh, the price seems so high. And then, 2 or 3 years later, hopefully, and for the most part, it doesn't seem so bad. Late stage valuations were very, very robust. And, you could just look at all the charts and look at all the graphics. Some of the data that we looked at inside our proprietary database that we have was really that these companies, as far as the multiples, they were really very similar to what was happening in the private markets. I mean, in the public markets. So it wasn't that outrageous for some of the companies, not all of them. SoftBank really threw a wrench, as they say, into the venture world because of just the size of that program and just the way they were investing, which most of us know, but I don't need to go into. And so it did complicate things, and there was definitely a SoftBank effect in the market. And then a lot of people asked about WeWork, right? And everybody, oh gosh, WeWork. And in some ways, there were early stage investors in WeWork that are going to do just fine. And then there's a later stage investors in WeWork, like SoftBank, who is probably not going to be just fine on their investments, right? But the interesting thing about investing for early stage, which is generally what we do and generally what venture capital does, is you are limited on your downside and uncapped on your upside. So while if we invested in WeWork, we might have lost the $10 million that we invested in our $500 million fund, the upside, we could make 2 or 3 times our fund size if the investment works out. So it's just something to remember. And for us, that we see that all the time. We hardly ever have one company that's really going to put a big dent into our diversified fund of funds portfolio. But we have had one company, because of how well they did, whether that be Smartsheet, Anaplan, Peloton, now DraftKings, really create almost amazingly, not unlimited, but huge upside that we didn't even expect. So just remember, we actually didn't have exposure to WeWork, which is surprising for us having such a diversified portfolios. My comment then would be, you just can't look at that one event and have that deter you from investing in venture capital.
Interesting. Talk to us about what technologies are you seeing in the pipeline that you're excited about?
Yeah, two that I think about, and they're relatively broad, but I think so important. The first is machine learning, just fundamentally. And why do I pick that? I pick that because we have so much data that we're gathering out there in all the different vertical fields. And with machine learning, it can actually do something with that data to make either better decisions, more efficiency, maybe democratize certain industries in such a way that is just based more on data and facts than it is sometimes human intervention, which may bring bias into it, or you may not be able to look at such a large data set. And so we're seeing over and over again machine learning in ag tech and fintech and different areas really creating some powerful companies. So that's one that I like and I pay attention to. Another one is the intersection between technology and healthcare. And whether that be, this healthcare, IT, from something just like telemedicine, which is, absolutely accelerated. There are companies in that business that have actually already for 2020 met their revenue targets in that business because it's just accelerated. Now, we all had to use telemedicine for a certain period of time. And even my 85-year-old mother has been on telemedicine conferences for the first time in her life. So that's big. But what also technology is doing is actually helping on the therapeutic side as well with drug development and things like that. And so I find both of those areas really exciting and expect to see a lot more venture investment behind that.
So Lisa, you moved to London. I'm curious, what are the most exciting ecosystems that you're seeing outside of San Francisco?
London, of course. So Top Tier has been a venture investor for many, many years. We've always had some funds that we invested in Europe broadly, and we even had some co-investments and secondary investments here in, I'm gonna call it Europe broadly, and we actually include Israel too. I think it's a really exciting and dynamic area, geographic area to be investing in. There's a lot of pockets of innovation. There's a lot of very sophisticated, small funds that are being raised. Some of them are spin outs from other organizations. Some of them have maybe trained in the US. And before COVID, it had become clear that even the US VCs found a lot of what's happening here, that the entrepreneurs and the businesses that were being created here, that were being built globally for global businesses from day one, they found those attractive because there was a lot more US VCs coming over here and doing deals. And I expect it to continue. So we really do like this geography. Silicon Valley will be Silicon Valley, and there is a specialness there that is just so kind of nurturing for the venture capital entrepreneur community. But as people move away and as young generation comes up, I think there's going to be pockets of innovation, globally in areas that weren't so obvious, in years past. So, for Silicon Valley to be 80% or whatever it was of the VC market, it's already less than that today, and I see it reducing. I do believe it will always be an important kind of, ecosystem and catalyst and center for VC though.
Very interesting. So all important question, what is it that you look for when selecting your managers? What are the key attributes? Are all the managers out there in London to San Francisco to China? What is it that you look for? What's the common thread?
Yeah. In a perfect world, the individuals or a set of the individuals will have actually managed institutional capital in the past. That's hard, especially now where you have a lot of VCs and a lot of people raising funds that have been operators, excuse me, operators and angels, not necessarily managing institutional capital. So that's important. And certainly to have the mindset of what that is. It's very different to manage other people's money than to manage your own money. right? And to be somebody that really wants to take that on and really wants to take on the long-term nature of what that is. So that's important more from a person standpoint. As far as what rises to the top of the pile, because of course we get a lot of inbound opportunities for our platform, to invest in funds. And it really is, we have a program that we're investing in a lot of the top tier, no pun intended, and name brand firms that we've had access to and relationships with, and that have delivered solid and consistent returns, and they will continue to be a core part of our portfolio. But it's what we do on the edge that I think differentiates us from a competitor and what that is. And for us looking at funds, it's really about what you're doing on the edge. What is the differentiation? What is your, secret sauce, as we always say? What is it in your networks, or the way you evaluate deals, or the way you construct your portfolios that makes you different? And can you articulate that difference and your ability to generate the returns? Those are the things we really look for. And then, I always call it my dinner party kind of criteria, because these are long-term relationships. Is this someone or a group of people that you trust, that you want to be with, you want to help? There's going to be good times and we're going to celebrate, but there's going to be bad times that we're going to have to, roll up our sleeves and work through. And who do you want to be your partner through that? And those are kind of some important, more qualitative criteria that we think about.
Lisa, last question. This is very important in today. What do you think leaders in the VC space can do to make sure that more women are successful in the space and that underrepresented minorities are able to be part of the ecosystem?
Yeah. So now, if you're not woke, I don't know where you've been. And I think all of us recognize that we have inherent biases, right? And so I think first facing those and recognizing them and being honest with yourselves and with each other, whether it's your management team and the people that are making decisions around the firm, I think is super important. I'm in London. My partner here, he's a Black man. He's from the UK, so he does not have the American experience. But he said to me the other day, super interesting, things that I would never have thought of. He says, I look in the mirror every day and I see that I'm a Black person. Do you look in the mirror and think that you're a white person? And I'm like, no. Right? So just understanding and having these conversations and thinking about these things is kind of step number one. To me, step number two is really bringing on a more diverse team throughout the organization. And, as you talk about this, it's not just one person, because one person isn't enough. You still can't look and go, I'm going to feel welcome there, right? So create an organization where there's a more diverse individuals will feel welcome in your organization. And then I think lastly, it's you bring people into your organization, but you have to continue to develop them. And you have to continue to think about how to bring additional people into the organization. In some ways, some of the groups that have been working on this problem, we've been working on this problem for so long. In the mid-'80s, we had TWIGO come up, and the NASP, which is the National Association of Securities Professionals. They've been in operation, we've been involved with them since the 80s, right? And then in 2014, the NVCA had its diversity task force. And now, in 2018, you have the Black VC activity, right? I mean, there's been organizations that have tried. I'm hoping that we're going to make a lot more progress now, but I also think you have to go younger. Absolutely. And that's what some of these organizations do. And go down into like middle school, and really we're kind of feelings about oneself and one's opportunities can really are really being developed. So as we reach down, even further into the youth. So those are the big things that I think we all need to do, but, less words, more
Right.
action.
No, Lisa, I think you hit it on the nail. When I think about it, I also think of it as a national security issue. Countries like China that have 1.2 billion people, where education and the masses and people in the younger age, they're pushing hard. If the United States is going to compete globally in technology, you can't have swaths of people that are disenfranchised, right? Just by sheer numbers, you have to have every single person on board and helping improve our American experiment, because we just can't compete. And so I think that those were really, really amazing points that you point out, that we have to take a responsibility to start young, because it's these are our communities also. So thank you for that point. Is there anything last words you want to put out there, Lisa?
Oh, to Grace and the organization. Um, I know it's an organization that hasn't been around that long. I think there's a lot of supporters, and I know there's a good network of people around it. And I just would say, keep it going. If there's anything that I can continue to do, or I can help with, I would love to do that, and continue to do my part, like we all have to do, to get more diversity, not only into the venture community, but also more broadly into the financial services world and entrepreneurs.
Okay, well, Lisa, thank you. This was my first interview with someone, so I'm glad it was with you, and keep doing all the amazing stuff. Thank you.
You're welcome, Sasha. It's been great. It's always good to see you.